stream. Alright, the stream on YouTube should also be up and running. That should be good to go. Perfect. I'm still using the old banner, so yeah, let's just leave it at that. I'm not gonna set up a new banner right now. Maybe after the CPI news report. I've got my phone ready just in case. So let's take a look at what we're working with. So on our hourly time frame, all the analysis, we've already done all this analysis this morning within our tape reading session. This is our 1 hour time frame, our 1 hour bearish fair value gaps. We have 6 minutes to go. Let's drag it out until 4 p.m. today. That's all we really need. 4 p.m. our 1 hour inversion fair value gap, and this tiny little bullish fair value gap where we caught long from early during the London session, if you remember. I'm gonna wait until after CPI. I mean, right now we're at the high of the week, high of the day, and theoretically also high of the year. We have that, if we turn this on, the 2023 high just sitting above us. I'm really curious to see what's going to happen. We can see right here, we have a hourly fair value gap as well. So we could basically, where we're holding support on right now. So let's do it like this actually. Fair value gap, 1 hour, a very clean and fresh one. We already used that during London. So let's break it back down to the 5-minute time frame. Just going to use 1 hour fair value gaps here for the higher time frame to frame my buyers on a daily. I know we're already up pretty high, and I think we can push through at 2023 high, at least with a wick. It depends. So there are 2 scenarios that I could see playing out. This was the London session long. Our inversion fair value gap set up to the downside. Sell side liquidity right here has been taken. Our 1 hour bullish fair value gap. Let me just get everything organized. Our previous week's high. That's where we're holding resistance at right now. On a 5-minute time frame, we have 5 more minutes, or yeah, 4 more minutes now until news. Wrong screen. Sorry, guys. Wrong window. So we've got this 1 hour bullish fair value gap below here where we kept on holding, yeah, nice support here. We filled it in completely, wicked inside of it twice now on the hourly time frame paired with a hourly inversion fair value gap right here. This would be an hourly bearish fair value gap. This morning, the London session long, we reached this hourly buy side liquidity pool. Now I'm interested to see if we can push above these relative to equal highs. I know that Nasdaq didn't make it all the way up into it. So let's just see on Nasdaq, we are still based on the daily time frame in that highest bearish fair value gap. But same goes for this one. I would be surprised if we wouldn't see a week. I'm also interested to see how much of an impact the CPI news event is going to have today. I'm going to focus on ES because that's the main asset that I trade on a daily basis. Master of one instead of master of none. This is our previous day's high and our previous week's high right here. This orange and red line from the ICT All-in-One Indicator, if you want to know what that is. This dashed line is the New York midnight level. We caught the pump up during the London Open, basically, where we retraced into this tiny little hourly bullish fair value gap, and also on the 15. Where is it actually? Right here now on the 15, we didn't even have a fair value gap, but on the hourly, into buy side, already shared that on Twitter, and then we talked about using this bullish fair value gap once we close above it as signal for a potential short, as a pump and dump. closed below, and we continued lower, heading into sell side. We still have a partly unfilled bullish fair value gap all the way down here at the low. This is kind of starting to look, at least off right now, like a bottoming formation, a double bottom. Sort of, we form a low, pull back from our first low, pull back, second low, and then third low. And note how we always get rejected from our previous day and previous week high right here, those two red lines that I talked about. That would be that accumulation. And usually we can have some sort of an idea of what kind of reaction the CPI news candle will have based on what has been set up before. Also keep in mind that on the CPI news release, for at least like the first 10 seconds, of course there are insiders that are likely jumping in now because they already know what's going on. But the order book usually is very thin for those first 10 seconds. So yeah, market makers really use it as an opportunity to move price into any given direction. Because the order book is very thin, they don't need much money in order to create a big wick. So if you are in any trade right now, I would suggest you to, unless you're super confident, to close it. Let's wait 10 seconds to go. I already made sure I'm not in a trade. We see that initial push up. All right, that didn't go according to plan. So we got that wick up and we're starting to retrace. But let's see. So we already see that impact of the very thin order book. I mean, you blink with your eyes once and price already moved 50 points. Let's take a look at NQ. NQ also looks like it's rejecting. I'm gonna follow along here on the hourly time frame. NQ actually took the high of the day and managed to hit my buy side target that I wanted to see hit. Let me get out of this here quickly. This was just a fun, let's hope CPI is going to the upside. See how long it takes for me to get out of the trade here. That's also part of this thin order book. It takes, even for this paper trade here, a while for you to get filled, because there's no one taking the other side. There we go, now we've got filled. So we actually have SMT divergence at the highs. We hit that last buy side target within that highest bearish fair value gap here on NQ. While on ES, we didn't take out this high. So, no, not for... Like I said, I'm not looking forward to take any reasonable trade. Before the CPI news event, I plan on reacting. That's that bearish SMT divergence. We hit that last buy side target we were looking for during the London session on NQ, but we rejected just a few ticks shy of it. There goes that bearish SMT divergence, and we're starting to retrace off that highest bearish fair value gap on NQ. Getting back to ES, also that highest 1 hour fair value gap before we hit that 2023 high. This is where it comes from. We've been holding resistance here couple of times during that sideways movement right here, and once again here. Previous day's low sell side at this orange line and all these higher lows. Relative equal lows right here. This would be all the significant lows I would like to point out for potential sell side targets. Here on the 5-minute time frame before we hit that previous day's low, Wednesday's low, then we could continue lower eventually. But just because that first 5-minute candle is moving to the downside doesn't mean we won't continue to the upside for the rest of the session. A good example for that would have been if we go to the let's go to the 1 hour chart and go back to the 12th of December. It was right here. We also saw that initial move to the upside and then to the downside. If I go to replay here, let's go to the 15-minute. Initial pump to the upside. This whipsaw movement, pump to the upside, reversed to the downside, and then eventually with the market open, we reversed all the way back above our data high, eventually by the end of the day. But I would also say the CPI event is slightly different compared to today's, because after this CPI news event on the 12th of December, we actually had a FOMC news event on that following day. Tomorrow we only have the PPI news event, which overall doesn't have as much of an impact compared to the FOMC news event. So let's see. We hit yesterday, I guess, PM session sell side, we could say. 1 PM, well, almost. Let me drop down to the lower time frame on NQ. Do we have any questions? Let me check the chats. Yeah, I'm also flat, like said. I would prefer to wait for something on a New York open candle or around the New York opening. Usually on CPI, we leave behind a big bearish value gap in one way or another. Could have also seen that to the upside. The SMT divergence is interesting though. See what it looks like on a 1 minute time frame. So now we're inside this, what ICT often refers to liquidity void, because yeah, it's on that 8:30 CPI news candle where price is just moving too quick, not the typical fair value gap. We can immediately see that we're starting to push back here, almost back at the VWAP. Let's watch it on the 5 minute time frame. Let me check if we have something on YouTube. No, that's YouTube. Come on. There we go. Nope, no questions on YouTube, guys. Feel free to ask me questions. Or maybe share your CPI 50 point or 100 point move, if you took any. Let's get back to TradingView. Now my next question, or my next step, would be to see where that 9 AM candle is going to close on the hourly time frame. What the CPI hourly news candle looks like, because that CPI news candle on the 5 minute time frame happened right on that new 30-minute candle. So I'm interested to see, yeah, what the hourly candle will close like. I mean, we still have 25 minutes to go. We only have one fair value gap here. Let me make sure I organize my object tree here. That's all the 1 hour stuff. It's sort of lower time frame CPI stuff, but don't think we need that anymore. We don't need this right now. It's just too old and too insignificant. Sell side, nope, we don't need that either. Put that into the 1 hour fair value gap section. And those trend lines, where are they from? 1 hour buy side. That also can go into that 1 hour folder. That's a 2023 high. This way I can keep different time frame analysis or multiple time frame analysis very clean. So if I'm, for example, on a 1 or 5 minute time frame, I can decide what I quickly want to look at with 1, 2 clicks. I have all the hourly information on my chart. And if I, for example, like to do 4-hour analysis as well, I would have a folder with 4-hour fair value gaps and daily fair value gaps, like here, for example, daily structure, weekly analysis, even the yearly overview, and simply with 2 clicks. First click right here on the object tree and data window. Object tree is open by default. I can turn on and off these specific things. Lower time frame CPI analysis. Well, really, we could put this into the 1 hour fair value gap section, and that previous day's high is really unnecessary. So let's see how we move here. If we hold support on that bullish value gap here, let's do some 1 minute time frame tape reading. Got in right at the low of the fair value gap, and we do it like always, but on a paper account, we wait for the invalidation of a fair value gap in order to manage our risk very smoothly, but on a paper account. You could keep track of your results on CPI news days on your paper account, and once you feel confident in your results and all that data that you've collected, then I'd say I think it would be a relatively good decision to trade the CPI news event even on your funded account. I'm staying away. I secured my profits for the London session. If I'm going to engage on my funded account, then it's going to be once New York opens up. So for now, it's just tape reading, watching price. This is the bearish value gap we reacted off, and also that 50%. That's our CPI 1 minute time frame bearish value gap. Already invalidated this bullish fair value gap right there. Turning it into a inversion fair value gap. And as long as we don't close below this fair value gap right here, I'm going to hold on to this long. My stop loss is going to be a body of this candle's low. If we start to form a new higher high, I'm going to trail my stop loss. And that next step would be trying to get back above, if we continue bullish, of course, and form that next higher high, to get back above this bearish fair value gap here, the midnight level, the 8:30 open level, and potentially that 2023 high. But already just this candle right here, or this move, it's already 5 points. To put it into perspective, we were looking for 5 points also during the London session this morning. All those candles combined together, almost up to the high. If we go to the 5-minute time frame, that's a 5-point move. Today we got in during the London tape read right here. From the low, basically, the inversion fair value gap right here. That's 5 points. Max would have been 6.5. If we do that on the 1-minute time frame now, and just look at this single candle right here, that's almost 5 points. And up to here, that's that entire London session move within 2 1-minute candles. That's why it's wise to, if you typically use mini contracts as an entry, I think today would be a good point in time where you could, if you decide to trade on your evaluation or your funded account, to use micros. Just because this is already it's a 6-point stop loss, that's alright, but usually on CPI news days, those candles are going to be a lot bigger. Tiny little bearish fair value gap here. So far we're still holding even at 50% of this bullish fair value gap. I like what I see as of this point in time. Let's see if we have any questions. Yeah, stops cleared on both sides, that's for sure. It's typically what we see on a CPI news candle. A whipsaw. CPI numbers are positive for the US dollar. Okay, that's good to know. But that's not going to affect my analysis. If they're bullish or bearish, I'm a short-term trader and not a trader to hold for the long or mid-term. Opening my eyes and listening to price. That's what I like to call it, or what I started to call it. Listen with your eyes wide open. Price usually tells you what it's up to. Did anyone take any CPI trades before CPI, speculating in which direction it's going to go? Like actually on a account that matters, like a evaluation account or funded account? Just out of curiosity. If I don't see anything, I just assume that. Well, I don't want to say smart enough. There are also smart news traders out there that know exactly what they do. Bearish S start, okay. would that wick? Yeah, okay, no, it doesn't matter. Mm-mm-mm. Yeah, I think it's just always a healthy bias to have. If we're at the high of the day, high of the week, high of the month, relatively speaking, before the CPI news release. Mm-mm-mm-mm. Going sideways. We had our nice London session action, but we already talked about that. Now let's see where we go from here. So far, we didn't see any clear confirmation of where we're gonna go next. If we close below this bullish fair value gap, I think we're very likely gonna continue lower, maybe even retesting it as inversion fair value gap if we don't just, push below it. It's 849 right now. Let's see. Just getting started. This was just practice, fun tape reading right after the CPI news event on a 1 minute time frame. Getting sandwiched between the two bearish fair value gaps here, paired with the inversion, paired with our inefficiency right here, our liquidity void basically, and this bullish fair value gap. Of course, we already lined that out. We have more sell side to the downside that we could potentially be on the lookout for. But first of all, we have to invalidate bullish structure to confirm that continuation lower. So we leave it on the chart. We also get that next hourly candle and the 8 to 9 a.m. hourly candle close within the next 10 minutes now. Let's see, that's what we would reference as the macro, 8:50 till 9:10. I did London live streams for a while, but I decided not to because I don't have the time available throughout the day to do 2 live streams. I do the tape reading and I'm really, I try to do a very good job. As a community within the VIP members, we can take a vote and, for example, say that when I'm not streaming live on YouTube, so Tuesdays and Thursdays, we can do, for example, Wednesdays live stream during the London session, or Mondays, for example. Yeah, we would have to take a poll on that. Usually we see the most activity during New York, but that might also be correlated to me streaming during New York and not just tape reading. So right now I'd say I couldn't tell you with full confidence. I see activity during the London session, the tape reading hours. But because I'm then streaming New York and also trading US indices, I'd say, I would guess, more activity during New York. But that would depend. I'm gonna set up a little poll where we can decide if we should do a London session live stream instead of the New York session live stream, and then but overall, my live streams aren't intended for you to always watch me trade live. They're there for you to, pick a few things out of my analysis and my trading style that you like. maybe merge it with a few things that you already picked from another live streamer or another educator out there, combine them and create your own unique trading style. That's at least my ideal scenario for the members that join me. That's okay, Gaurav. It just understand it takes time. It's a journey of self-development. I would really wrap it up as that. Let's see how we close here. We close below but open with a volume imbalance. I like to give it a second chance. If we see the close below but an immediate gap back at the low of the fair value gap, and I'm going to close on that next candle close below the fair value gap. Just, yeah, from past experiences. I think most traders that have been here, not here on the Discord or on this live stream, but who have been trading for more than a year or even two, I think they really agree with the statement that trading is more of a personal development journey than anything else. And some people, they just don't have the ability to change as quickly as others. Some people, okay, that's the close. Some people have a really easy time to, let me just try to, no, kept talking. So that would have been that second close below the bullish fair value gap. Let's see if we get the retest of our inversion fair value gap now. Paired with a nice bearish fair value gap overlapping. So let's see if we just play around here after the CPI news event, or if we actually, use premium and discount rates, these inefficiencies, to deliver price into a specific objective. Let's see, the time is 8:55, so that's also a new 5-minute candle. We kept on going lower from here, but yeah, we can already see that not with the momentum, at least in terms of looking at the bodies. Safety stop loss above here. If I see the close above this bearish value gap, I'm gonna, like always, like right here with this long, exit the trade. So I'm turning on my executions here so you guys can see what we've done so far before the New York session. So we entered long, almost right here at the low of the fair value gap. Let's say we would have used the 50% to play it safe. Safety stop loss maybe at the 50% here of this candle. 5-point stop loss, not giving it too much room to breathe. As a safety stop loss, that's what I like to call it. And then wait for the confirmation or invalidation of the fair value gap. We got out with a little bit of spread right here. Let's say 2.5 point loss roughly if we round it down. Let's see, now we entered again, short this time, using this bearish value gap to see if order flow is being respected. Safety stop loss just above this high. Targets, sell side below. Let me go to the 5-minute and measure out the 50%. How many points is that? 2, 3, 4, 5. Let's look for 5 points first. And then 10 points here at sell side. Of course it can still chop, but yeah, I'm just trying to see it for myself, mainly. However, tape read works just after that CPI news event by doing what I always do, following price, creating my narrative / bias using fair value gaps and premium discounts, liquidity, some common sense altogether. Yeah, theoretically, if we go to the higher time frame, it's still within the range of the CPI news candle. But following order flow, we've respected nicely. Once we closed below this inversion fair value gap, we retested it right here with this new up closing candle, filled in our bearish fair value gap. That's where we added our second entry. Now we already took our first partial. Going to move my stop now to break even with my final profit target right here. So just because we lost a little bit, I like to say here, on that long, that's how I managed to keep my losing trades compared to my winning trades relatively small. Because once I enter, I already have a very strict exit plan in mind by, reading price and watching the fair value gaps. Good morning, Will. So let's see, and we keep on doing it. This is not a 5-minute volume imbalance, that's good to know. The time is 9 AM, so that's the new hourly candle opening up now. Bearish fair value gap and a unfilled volume imbalance. Typically, we always come back for those to fill them sooner or later. Always. Take a look at NQ. NQ is also continuing lower, but didn't expand the 5-minute candle 830 range yet. Let's see, that's the first 1-minute time frame candle for the new hourly 5-minute time frame. 15-minute time frame. And 1 hour time frame. We close below this bullish hourly fair value gap here. Starting to hit this down closing candle, which within an uptrend can be viewed as potential support, mitigation, order block, whatever you want to call it. Let's see. Follow price. Perfectly hit the low of closing prices of these first news candles right here. Let's see. And like always, if you have any questions, feel free to ask. Especially if you start watching me trading live here for the first time. Don't be shy. So let's see if we keep on respecting bearish fair value gaps. I also mainly only do this on ES because I think ES respects these inefficiencies much better than NQ. That's my personal opinion. I know NQ is a very popular instrument because, that's the instrument. If ICT is sharing an execution, it's always on NQ. If it would always be on ES, then I think the majority of ICT traders would also trade ES. I guess it would be influence based, but that's what I prefer to trade more. It also has less decimals, so it's easier for it to actually respect the inefficiency to the tick. So let's see, we filled it in. Still have that unfilled volume imbalance here. Our stop is already protected at break even. For the session where we tried the long, right here, where did we get in? Where did we get out? One tick above. So initially looking for the bounce, we kind of got that. We could have also secured some partials after 5 points, but we weren't really focused at that point in time. Looking for that next higher high. And we got stopped out and immediately reversed our idea, following bearish order flow then, inversion fair value gap paired with the bearish one. So let's see how we close here. If we even close above this unfilled volume imbalance, then I'm gonna close out this position early with maybe a little bit of profit. Let's see, theoretically, if it would be very strict, I would frame this as a new inversion fair value gap, where we would now potentially hold support to push through it. But since we had this unfilled volume imbalance, and unfilled volume imbalances are really something to look out for if you never looked out for them before. Just, yeah, mark them up and see how price is reacting, specifically ES from these areas. Let's see if we get stopped out break even on that second buy, short here. If we manage to, yeah, keep on holding resistance here. Let me put that over here. Bearish fair value gap, inversion fair value gap. We already used orders. To continue lower, we failed to push above that. Let's see if we get the close back below this, yeah, inversion fair value gap. Not yet confirmed or invalidated. In my eyes, at least. Let's see, we close below. What's the time? It's 9:06, so in 24 minutes we get the New York Open. Check out what the 5-minute time frame looks like. We don't want to get lost on a lower time frame. This volume imbalance here, where we rejected from, is also a 5-minute volume imbalance. We see that same one on the 1-minute time frame with close, open, closed right here and open down here. That's that volume imbalance, just not really visible because we closed it in immediately on that 1-minute time frame. You can also use the ICT all-in-one to show you all the volume imbalances and even multi-time frame volume imbalances. But I don't need that anymore. Yeah, how would I say? After a while of training your eye on these volume imbalances and inefficiencies, I think an indicator isn't really helpful. My screen is frozen. Sorry, I didn't check that chat. Oh, yeah, let me stop streaming, start screen again, screens, screen 2, go live. Now we should be live again. YouTube stream freezing as well, let's see. Okay, we stopped out at break even on that second position. Looks like the YouTube live stream is frozen as well. Not sure what's going on here. Connection looks stable, but guys, can you let me know in the comments, is the YouTube live stream frozen, or do you see price, at least my screen? Damn it, out of... If so, I'm gonna restart that if I get the chance to before we hit the New York Open. It is frozen. Thanks, Matthew. Let me try to fix that. Now we should be up to date again. All right, now we're getting back to the charts. Continue the tape read until the New York Open, and we likely switch to the higher time frame. Bullish fair value gap, we kept holding support here. Now we closed above this bearish fair value gap where we caught the initial short from. We turn it around. Inversion fair value gap, we look for short-term highs to target and old areas of resistance. This is our CPI fair value gap. Another 1 minute fair value gap right here and right here. And that inversion fair value gap that we used earlier. So not really, glued to a specific bias. Just going with the flow right now. There are good times to do that, and there are bad times. That's why I'm just, playing around with it on the paper account here. So I don't think this is a live account. This is just my demo practice account. We secured profits during London. Okay, live stream is doing well. Discord stream isn't frozen. Perfect. Thanks for letting me know. This won't be really helpful here at this point in time. Very old one. We used it once we closed below, paired with the bearish fair value gap here to catch the short. So right now I'd say we have 3 points in profit just from this 1 minute time frame scalping. Let's see. Did I catch it? Well, nah, spread caught me. But I like how we move out of this bullish fair value gap, close back above our inversion fair value gap here, an old bearish fair value gap. We use this resistance to deliver lower, but we really failed to continue lower, and price showed us that it's not really interested in using bearish discounts here to continue lower. Otherwise, we certainly would have used this to continue lower. At least that's what I assume always. We actually, invalidated that idea and pushed to the upside. So let's see if we now, after leaving behind our first bullish fair value gap, use this as support to deliver into our first short-term high right here. And then that next short-term high would be up here. Back into our old area of resistance. Check out the YouTube chat. Perfect. Thanks, Matthew, for the update. So ideally that entry would have been down here, obviously, where we have that overlapping confluence of the inversion fair value gap paired with the bullish fair value gap. But at this point in time where we retested it for the first time, let's try to fix the frozen screen. Let's see and listen. What's the time? It's 9:14, so that next 1 minute candle is also going to be a new 15-minute candle. I could see it push back into this 15-minute bearish fair value gap. 5-minute short-term high and 5-minute bearish fair value gap. Starting to return. We already looked at the example on the 12th of December. We saw something similar if we compare it to the 5 and 15-minute time frame, where we had that initial move to the downside. Then once New York opened up, we started the rally all the way back above our CPI high. Doesn't mean it has to happen today as well. We will see how the New York Open, what the New York Open does with price and react. If I see a good enough opportunity on a 5-minute time frame, I'm going to also get involved. Otherwise, I'm just going to secure the profits we made during the London session. All right, we cleared the first short-term high. Going to secure a partial right here, sell one limit. Where do we get in? And right up here. Both terrible entries, for being honest. 5 points. It's our 1 minute big inefficiency here. We already talked about above this high. That's the beginning of our 5-minute bearish fair value gap. If I'm not completely wrong, yeah, that's our 5-minute bearish fair value gap, and we're about to hit our take profit target already. Come on, let us get filled too. We also have the VWAP sitting here, our baseline. Price likes to turn around too oftenly. Let's see. Do we get tapped? Let's break above the short-term high. Come on. We left behind a new bullish fair value gap. That we're going to use to read price. Bullish fair value gap. That's it. That's the inversion fair value gap that we closed above. And once we closed above, we immediately retested it. But look how well the bodies respected just this old bearish fair value gap here from the left. We used it as resistance before to catch the short here lower. But once we get back above it, paired with a bullish fair value gap, we now use it as support to deliver back into the short-term highs. Now we have equal highs sitting right here. Let's see if we can push through them and fill our first partial. Then we have this bearish fair value gap above our old area of resistance, taking it step by step. The time is 9:17 and now 9:18. We have an even smaller bullish fair value gap now, just in between. I'm gonna get rid of this one and this one right here. So initially a bearish fair value gap, which has been respected perfectly to the tick. That's why I trade ES. with the body to continue lower. Now we start to close above it, so I look forward to see support from this area. All right, we hit our first target. Let's see if we can continue. Next target, I'd say, let's put it here, or maybe even just trail it. Equal highs are cleared. That's our last level of defense, this bearish share value gap, before we potentially run up into the short-term high right here and the beginning of our 5 and 15-minute fair value gap. Yep, so we're hitting that 15-minute fair value gap now. Our stop is already, like before, protected at break even. Right here. Taking one off as partial. So now I think we're up 7.5 points with mini contracts. That's 5 points, 250, right around $400 just by reading price on a 1 minute time frame right after the CPI news event. I think that's not too bad. Another tiny little fair value gap. They get smaller now. Still don't close above this bearish fair value gap. We're respecting it so far with the wicks perfectly. Stop loss, yeah, that's fine. Let's get rid of this 1 hour stuff right here. 3:20, 10 more minutes until the New York Open. This is a new 5-minute candle. We have a 5-minute inefficiency down here as well. And like I said, we just hit that 15-minute bearish share value gap here, the 8:30 bearish share value gap. 1 minute time frame has now filled in the highest bullish inefficiency that we haven't filled in just yet. So if we close below that, it's very likely gonna A, stop us out at break even, or if we just close below it with 1 tick, we're gonna close it manually, securing tiny bits of profit. But right now, as long as we respect this fair value gap, there's no reason to believe that we're gonna immediately reverse from here. We follow the trend to the upside here. These tiny little fair value gaps compared to those bigger ones, not too big of course. If it's, for example, this size, I call it a liquidity void. Let's see, we close below this inversion here, but immediately close back inside. If we use this now, paired with this, yeah, we could call it a inversion fair value gap because we actually close below. If we use this now to deliver lower and close below this bullish fair value gap, could flip our short-term bias at least again. Not interested in what's going on in the bigger picture, just taking these tiny little, not tiny little, I mean after a CPI news candle, those are still 5-point moves. Right here and right there. But as of right now, it looks like we just filled in our inefficiency before we continued higher. Let's see if we now close above our bearish share value gap, continuing the push into our 5-minute bearish share value gap up here at 8:30. Inversion fair value gap. Getting closer to the VWAP. That's usually where we like to go sideways. Volume weighted average price. I know ICT isn't using VWAP, and I already got some hate for it for including it in the ICT All-in-One, but I like it. I see it being used as a baseline and as yeah, it's just a good reference point for me. I like it, so I include it in the indicator because I use it. If you don't like it, then I mean, that's how I created this indicator. You simply go to the settings, and here right from the control panels, those 3 control panels, you can turn off, yeah, basically anything you want to see on your chart or not without having to scroll through all these 100 settings. You modify them once, and then you go over to here to the indicator template and say, for example, the CME futures template or the NASDAQ futures, Euro US dollar futures, or CFD, whatever you trade. And once that's saved, all the settings of the indicator will be saved as well. Very simple. Let's see if we hit our next short-term high. I'm curious to know if all what I'm talking about here, how I use fair value gaps to frame at least that short-term bias on a 1 minute time frame, and how I can follow price. If that makes sense. Would surprise me if it would make sense to everyone. I think it's a rather unique approach. I haven't seen many people that also stream do this. And there goes our second take profit target. So right here for the account history, that was the CPI YOLO long, we could say. We took the loss, that first loss right here, where we tried the long with the bounce of this bullish fair value gap. That failed. But from here on, we've pretty much kept getting it right. Bearish fair value gap right here, partial at 5 points profit target. Then the other contract got stopped out at break even. We took another partial after 5 points on this long right here. And then another 10 point, almost 10 points right here once we hit that 5 minute bearish fair value gap. So let's see. That pretty much wraps it up for me, really. Before the New York Open, I think we did a good job so far following price. Let's see what the New York Open does. Already pretty extended. Not, well, on a low time frame. We keep on pushing. Mm, 15-minute fair value gap. About to be filled in. Let's see how that candle is going to close. I'm going to follow it now on the 5-minute time frame now that the New York Open is coming up. Let me check the Discord chat. These templates are actually not based on the ICT All-in-One. Those are old ones. It's very simple for me. I mean, yeah, I can share my template. That's not the issue. Copy link and put it in the chat here. It's very simple because I only trade one chart. If I open up my trading view, this tab opens up by default with all my saved settings. Because I don't skip through a watch list of 10 different assets. I just do yes, because I really I developed that good feeling for how it typically moves. Of course, that's going to take a little while for you to develop that same sense, but eventually you get there. then I think there's actually no need for you to have more than one chart open at the same time. Sometimes for SMT divergence, I like to look at NQ prior to the New York Open. We see that we don't have bullish SMT at the lows. NQ, for example, didn't make this lower low. Same goes here for ES, but it's now also starting to retrace, getting inside of our bearish 5-minute fair value gap. But we saw the SMT divergence here on the CPI news candle at the highs. We have 50 seconds to go before the New York stock market opens up. Let's see how that goes. We're on the 5-minute time frame on both charts. We already used all that. -2 standard deviations from bottom manipulation measures to 4827 from bottom manipulation. What would be your bottom manipulation? That's the question, because okay, that's New York Open now. Let's keep an eye on it and see how we close here. Now we're back to our previous day's high, previous week high lines here from the ICT all-in-one. Orange and red line. The orange one is the previous day's high. The red one is the previous week's high. The dashed line is the midnight open of today's price action right here at midnight. Nice, well done. Well done, Simon and Fady. Good job. I hit my target during the London session. That's why I would only consider taking a high probability setup on those funded accounts. Like we said, we simply followed price on a 1-minute time frame, anticipating the continuation higher, really. We saw, okay, price is not interested in using bearish fair value gaps to continue lower. Well, what's it going to do now? So we wait for that second confirmation. We could already enter if we were still on the short at that point in time, waiting for it to get stopped out at break even, but usually on that second confirmation, especially if we have some overlapping confluence, bullish fair value gap paired with the inversion right here. And that's where we got in on that continuation higher, securing a partial after 5 points right here on this short-term high, and the next one once we traded into this bearish 5-minute fair value gap. So let's see how we continue through the New York Open. Perfectly filled in this 5-minute bullish fair value gap. Let's see if we do that same thing that we did earlier on the 1-minute time frame. Right here. where we were already above that short-term high, and we retraced into this 1 minute bullish before we continued higher. We could see that same thing happening right now with this bullish fair value gap, reprice into our highest discount before we managed to close above our 5 minute bearish fair value gap. If we close above that, I would be interested in playing along into buy side liquidity. Then the question would be, how much risk would we be getting into, because the candles are just much bigger after the CPI news event. So only this candle already has a range of 10 points. This is the entire range from our current high of the day all the way down to here, and that took almost 1 hour to get to this point, and we do the same amount in points now during one single 5 minute candle. That's why, yeah, using micros would be suggested. Mm-mm-mm. 7 seconds to go. We closed right at the high, but we didn't close above it. I was about to jump in on it, and Q did close above it. Well, I guess now it's too late. Let's see. So this would be that typical inversion fair value gap setup. We close above and we continue to push. Like you have seen that on Twitter already. If you are on Twitter or maybe on YouTube. The guy who's doing that his name is Dodgy. Been chatting to him a little while back, talking about his setup. He kind of branded that inversion fair value gap strategy to his brand. I mean, it works well if you know how to apply it. Thanks, Simon. Like I said, if you have the time, maybe on the weekend, I put it in the announcements chat. Feel free to leave a review on my wop.com. That would really help me out. I put a detailed description on how to do that in the announcement section. Appreciate it. And there we go. NQ is pushing into that data high. Can already see what he's going to tweet later on. Jumped in right on this close above the bearish fair value gap on NQ. Targeting this high. But like I said, today I'm not in a hurry. Lauren session already provided us with a good setup. And right now we didn't close above our bearish fair value gap yet, at least on the 5. Also not on the 15 if we take a close look. We closed right at the high of our bearish fair value gap. On the 1 hour time frame, we have a nice potential bullish engulfing candle here. If we continue to get that momentum to the upside. Can check out the 1 minute time frame again for reference and see what's going on over there. I think price should even hold support right here. Those two down closing candles likely acting as support or a order block for the continuation into our buy side targets. Bullish fair value gap. Let's see. Doesn't mean I immediately hop into a long, so trying to practice that. Those have been my biggest flaws in 2023 when it really started to click for me, because then you see opportunities left and right, and I ended up being almost in every opportunity. And now my main job in 2024 is to to clean out the garden, which is my funnel account. Weed it out basically from all the impurities. because then it's really hard to, if you trade with that, with a similar style to what I'm doing right here, what we for example did on the 1 minute time frame earlier, catch this long to the upside. Yeah, because you see opportunities left and right. You eventually always see a fair value gap and, oh, okay, now that's going to work, but, well, you don't really want to end up trading 24/7. At least I don't. And there are higher probability and lower probability times throughout the day. But sometimes, yeah, as traders, we just lose control of it. I think it's fair to say that we call it losing control. It doesn't have to be every day. It just has to be that one day that tickles you, where your emotions pop up and you start revenge trading and that stuff. Well, that one day can mess up a lot of work that you've done before in terms of profit. Let's see how we close on this candle. Okay, we still didn't manage to close above here, but we open with a bullish volume imbalance. Let's check out the 1 minute time frame. Note how the 1 minute time frame is still holding this bullish fair value gap that I've mentioned right here with the candle bodies. So let's just take a paper trade right here while we're at it. Put our stop loss below this low and our take profit target into buy side. See how that goes. Can reference the volume imbalance maybe even as an example. Still closing inside this bullish fair value gap. Wicks to the damage, bodies tell the story. That's how it goes. And now I don't have a trade on NQ. I just mention it because that one guy on Twitter that I always see on my timeline using the inversion fair value gap strategy, especially on these CPI news days. Once we close above that bearish fair value gap like we did here on NQ, that's his signal to go long to target that data high. At least that's what that's what he's calling it. This is just me testing it. Not that I'm going to necessarily use it in the future. But now I'm still in no trade at all. Well, I just got a notification. Bitcoin is at 48k. Nice. ETH at 2.5 to 6 actually. Portfolio almost at a 10x. But only because I accumulated during the bear market. One of the hardest things to actually do. We closed below the bullish fair value gap, so that and below this volume imbalance, which would already scratch that idea. So I'm gonna get out here. Let's bring it back to the 5 minute. We see on the 5 minute how perfectly we respected the fair value gap here on ES, while on NQ we closed above, which could have been misleading. Like I said, still didn't enter. Yep, 48k was next buy side on the weekly. Crypto gang. Gang. Actually running a node on here too. Let's see if I can. Yeah, that's a node I'm currently running. I've covered energy web token before within our little crypto degen corner on our Discord. But let's not cover that on the live stream, just because we brought it up. Saw the CoinGecko notification on my phone. Let's see, VWAP. If we hold support or if we break below, we open with a bearish volume imbalance. Not the best sign, if you ask me. General chat, what's going on in there? Let's see. SBG, you should have access to the live stream now. The bot should, yeah, you're in here. You should do that automatic. It should do that automatically. I'm really pleased to not have jumped the gun and simply stuck to the plan here on the 5-minute time frame. If I would have seen that close above, I would have entered the long. But because I didn't see that close above, I didn't enter. And that's one of the reasons why, yeah, there's high level of precision trading that, or trading style that I use works much better on ES than in Q, at least in my opinion. I would have a hard time to really trust fair value gaps here, because it's also harder for NQ to actually respect it with more decimals here, if you look at the scale. If you think about it for a little while, it makes sense. That would have been a stop out based on the inversion fair value gap theory. Well, over here on ES, to the tick, hit that previous week's high again, filled in this entire inefficiency, wicks doing the damage, bodies telling the story, closing back below the bearish fair value gap. If we keep doing so now, below this bullish fair value gap, well, we could look forward to potentially short. I'm, well, on the sidelines, to be really honest with you. I think I'm just gonna leave it at that. I still wouldn't call it a high probability setup. It would just be going with the flow. But as we can see, we're still within our 830 candle range. Don't think we can talk about high probability setups inside of it. We can really apply that real edge. And we scalped our way today to the upside here. Starting from here, we took a loss, then we got in the short. One contract got sold out at break even, the other one secured here at 5 points. And then we caught the long up until here. Then we took a little break for the New York Open to play out. Try that again off this bullish value gap here. But can already see that's the only bullish, no, didn't want to do that. That's the only bullish value gap here on the 1 minute within this price lag. And once we started to close below it, what happened next? Short-term low, being attacked. Can do this on all time frames. It's just a lot more tiring to do this on a 1 minute time frame. There's a reason why I'm doing that on a 5 minute time frame. All right, let's minimize NQ again. Not really interested in that. Little question for you guys here. Everyone that trades NQ, why do you trade NQ? Besides the fact that it moves quicker and hits your target maybe faster. But why is it really why you made that decision to, yeah, I'm trading NQ? I mean, for example, on Topstep, it's the most traded symbol by now. I think that's part of it is it's because ICT sharing his setups always on in queue. If we would do the same thing with YM, I think we would be in a different, well, I think YM would be more popular. Because I can give you a very specific reason why I specifically trade ES and not NQ. I wonder if traders that really, stick to NQ only or mainly have also a, good reason to, basically do so. Yeah, okay. I understand that. Closing below both of these two bullish fair value gaps, let's check out the 15. On the 15, we also respected the bearish fair value gap here to the tick. That's just that level of precision that I don't see on any other asset after testing it. Let's see if we actually continue lower into more sell side here from Wednesday. Yeah, I think the argument to have both open and trade whichever one looks cleaner is valid. I used to do that for a while as well. But eventually I started to see that, well, even though I'm considering both, I still feel like NQ is a little bit too wide for at least my trading style slash personality. Yes, really fits to me, I think. Too fast, YM is easy and behaves to ICT concept models like EQ. I agree. YM is most often doing sort of its own thing. That's also nice to have. When ES and NQ mostly do the same, maybe to diversify, look at ES and YM. Could see myself do that maybe. Got out too early. Where did you get in? Question number 1. You missed them quiz guessing Friday's closing price. Well, I guess we can do a quiz of where ES is going to close today. So for the YouTube chat, the VIP members can participate as well. In case one of the VIP members win, I'm just gonna give you a couple of days worth of free membership. Last time I think we did it, we gave away a free week worth of membership, wanting to do it more frequently, but I kind of slept on that. Thanks for the reminder. When I got it long, you went into the short. Interesting. Based on what specifically, day trader, if I can ask? Maybe for others to learn. Well, so yeah, everyone that's watching and wants to participate, if we get at least 5 guesses, I think it's gonna be worth it. So just for the end of until the end of the live stream, just guess. It's a guessing game. It's not a trying to come up with a mathematical formula of where we're going to close today on Thursday's candle without, if we go to the daily time frame, without looking at the settlement price. So I want to basically get a good guess of where this daily candle is going to close. If it's going to close here, if it's going to close up here, just a guess. And the winner gets a free week worth of VIP membership. So let's see. If we get 5 players, if I see 5 submissions, then we're gonna do it. I'm gonna guess, hang on. Let me zoom out a little bit. So I have the entire weekly range open. 1, 2, 3, 4, 7, 7, 6 is gonna be my guess. Let's turn on the chart again to actually see what's going on. Take a look at NQ. Is NQ following? Yeah, NQ also rejected here. Let me check the Discord chat if we have. Oh, we already have 2 odds. Let's see. 4860. All right. 4860 Bongo Rambo. Where's my guess? Oh, it's Friday midnight. And we have another guess at 4780. 4780. All right. Come on. It's going to be a close call, but all right, let's see. SPG 4780. Take care. I'll see you tomorrow after CPI news candle. 1 a.m. here. Also like playing the high of day as stop and go short. Well, was it the high of day? I mean, we can take a look at the opening range gap, regular trading hours gap. Let's see what that looked like today. We open up right here at 9:30. And we closed yesterday somewhere around here. So I think that should be filled in. So that's our regular trading hours opening gap right here. This orange box. Already filled in. So if we were to switch over to regular trading hours, this would be the gap. We took out the regular trading hours high right here and rejected. If we look at the electronic trading hours, well, we had something in between, but you can basically scratch out this entire. Is this a 9:30 open? That's 9:20. So that's where we closed yesterday. Right here somewhere. Orders price action up until the 9:30 open. Everything above that basically erase this part. That's this gap that's getting created. Oh, then shoot your shot, Omar. 4845. 4845. Still within that 830 range. Yeah, well, I mean, we could drop it down to the 1 minute time frame and do some more tapering. Right now, I would just, based on a 5 minute time frame, look at this bearish value gap here and see if we use it as resistance. I'm pretty sure that if we pop it up to a 15 minute time frame, now we're gonna get that close in 30 seconds. So after filling in this entire 15-minute bearish fair value gap, we left behind a bullish fair value gap. If we manage to close below that, that would be also another sign of weakness for a potential short right here into sell side liquidity. And we could try. That would be the idea. Stop loss 10 points. Take profit target right here. I'm not going to take that on my funding pips account today. Gonna leave the we can almost market order in here. Yeah. Guess we cannot. So the next step after using or trying to use this bearish value gap here would be to see if we can close below this 5 minute bullish. And once we do that, hold below it to continue to deliver into sell side. One minute time frame, 5 minute time frame, 15-minute time frame. The low of this bullish fair value gap here, basically a inversion fair value gap now, would be the low of our 15-minute inversion fair value gap. Let's see if we can get a break below here. How many votes do we have? Let me check out YouTube. 4875 shoes here, alright. And that's 5, alright. If anyone else wants to have a little bit of fun while we don't see many great setups, then feel free to share your guess of where ES is going to close today on a daily candle. 4875 up here. Four eight seven five. Could also see, price staying with, well, it's just 10 a.m. Oh yeah, it's just 10 a.m. Interesting. I guess it's because I've started streaming at 8:30. That's why it feels so long. But it's just 10 a.m. so, well, really changes a lot. Time distortion. I feel like it's almost 11 a.m. End of the session. Two and a half minutes to go. 4856. There goes sell side. Likely 48. Yeah, first sell side target hit. Bitcoin almost at 49. Alright, first sell side target hit. Put our buy stop right here below our entry target. Let's bring up our 1 hour analysis again. And see if we now leave this range for good. Yeah, easy short for the ones who took it. I also didn't take it on my Funding Pips account. Really easy. I mean, it just tapped that 5-minute bearish fair value gap and yeah, left the chat basically. Almost 10 points now. 10 points hit. Did anyone got into it? I hope so. There we drop into oblivion. Free falling, heading through orders sell side that we left behind on Wednesday. Let's see if we can hit that previous day's low. Wish I could partial here with the mini contract I'm in, but I can't. So just gonna see if it can continue lower. Or if we're just going to drop here. I had my finger on the short, but it's okay. Already had a awesome week. But this would have been easy, like you said, Beatty. Nice, well done. Good trade day, trader. Thanks for putting the trust into the setup. We said 10-point stop loss, right? Yeah. Oh, that would have been a nice profit to bag and end the week with. But it's okay. Let's see if it hits our target at the previous day's low. 1 minute time frame wise, what are we working with? Yeah, just a quick sell-off. Little consolidation right here. Tap that 5-minute fair value gap. Waited for the fair value gap to form. Filled it, just ticked it. Yeah, and continued lower here. Nice. No, that's not the page I wanted to open. Well, this really wraps it up. So if you didn't take the entry from here or even up higher, if you already had the feeling this was going to happen, this was really that last opportunity. Getting into that right now, well, wouldn't suggest it because it's just such a big range here to the upside that you would have potentially, that you would have to cover. Like I said, this is the previous day slow, more sell side below that. Right here where we caught the long on Tuesday. And then Tuesday slow. Oh, touched that previous day slow perfectly to the tick and then bounce back. That's too funny. Once we hit that target, I think I'm going to wrap up the session. I think we can call this a good stream. Caught, well, plenty of setups today. Even on the 1 minute time frame initially, where we scalped before the New York Open. And then eventually, also that nice capitulation short for almost 30 points. We can really also close it here. It's not going to make much of a difference, though. So, yeah, well, now it's 5 points. I didn't enter on my Funding Pips account, and I'm honestly really cool with it. Cooler than I usually am when I, miss out. I mean, it would have taken me to, simply take that short here. But like we said, at that point in time, kind of on the fence about, taking a setup inside the range. If it wouldn't have played out like it did, I mean, we would have spent likely more time inside this bearish 5 minute fair value gap. And then eventually close above it, retracing into this fair value gap up here, and then playing around here for a little while, and then pushing up higher. And yeah, that's just not the risk. I mean, 10, 12 points that I usually take on. And if it wouldn't have played out, I would end the day going to the spa later on, to the sauna, wondering why I even did it. I already made profit during London, good profit. We caught this nice short pump here to the upside, right at the London Open for 5 or 6 points. we made sure to secure that money, and then didn't trade prior to the New York Open where we already made good profit. So if this wouldn't have worked out, and there's always the probability that it doesn't work out. We're traders. I mean, there's no 100% guarantee for any setup. Then I think I would have been more annoyed than I would be right now. Well, I'm not even annoyed. I think that's the wrong word to call it. But I guess you know what I mean. So overall, I'd say, yeah, pretty happy with the trading session today. Is there any feedback you'd like to share if you watched me trade for the first time here on YouTube? Or yeah, on Discord? Feel free to share it with me. It's all good. Any pop-up, I lose my account. Fucking trailing fresh out on Apex. Yeah, I know what it's like. That's why I made the switch earlier this year and December to CFD funding firms. I'm pretty sure we won't have much more action for the rest of the session. Well, likely not for the AM session. Damn it, you see that? Also look at the time, 10 AM. And with that new hourly candle, we get that continuation lower. If we check out the hourly, I guess haven't delivered my A game today in terms. Now, man, do not get upset. It's all Gucci. In 3% profit for the week already. This would have been a nice cherry on top of it, but well, it's okay. So today is going to be an outside bar. Interesting to see tomorrow and next week if we reverse. Yeah, very interested to see that too. And also who wins our little guessing game when I come back this evening. Let's take a look at NQ. NQ also dropped and continued lower after filling in the bearish fair value gap, but didn't take out the previous day's low yet either. Let's see, that's right here, the sell side liquidity now, so there's still potential room to the downside. And if I'm being really honest with you, just because we saw this move now to the downside doesn't mean that we cannot, it's just 10 AM, eventually slowly grind our way back up. Just saying. I've seen it before many times. That's why just because we had this impulse to the downside, it's not a 100% guarantee that we're also going to continue lower. All right. 10 AM, I've started streaming at 8:30. After this drop, I would really, I mean, that would be the continuation entry, kind of, into our previous day's low, since we didn't clear it yet. But we had major sell side here to the left. We just didn't clear that previous day's low. Did we clear this low? Let's see. Yeah, we also cleared this low, so let me drag that out. Looks like we're engineering some liquidity down there. So it depends what your risk appetite is like. If you get in somewhere around here, I mean, you're exposing yourself to, my stop loss would be above this high 20 points risk for a potential 10-point reward. Of course, you could also wait for it to enter, wait for price to get into the bearish fair value gap right here. But this doesn't mean that, well, if we immediately close above this 5-minute bearish fair value gap, and then start to hold support, oh no, I don't think it's worth the risk. This was the opportunity. almost hit our maxed out profit target. Let's see if we get there maybe later on. I'm just gonna leave it like that. Stop at break even. If we're gonna get immediately above this bearish fair value gap, let's wait for, no, we didn't get it yet. If we immediately keep on pushing and recover the 25-point drop to the downside here within 3 or 4 candles, closing above this 5-minute bearish fair value gap, then I could really see price easily walking up into this buy side without any issues. Alright, no, nothing new here on YouTube either. 4:21, so now it's 10:30 almost. Let's see how we push through those fair value gaps. I'm just not gonna talk too much unless you guys ask me a question. I'll stay on for charity. Gonna leave at 5, so at 11 a.m. New York local time. And following price continuously. One new mention, that's likely the tweet. As long as we stay within this lowest 5-minute fair value gap, then I think we shouldn't have an issue. Simply continuing lower, let's check out the higher time frames, the 15. Maybe leaving behind a new 15-minute fair value gap, fill that in and continue lower. Yeah, I mean, we outlined it, I think, very well. We had our 15-minute bearish fair value gap here. We never closed above that. We had our 5-minute bearish fair value gap here. Same thing. Bodies tell the story. Wicks to the damage. Only wicks above the fair value gap. No body. We closed right at the high. Didn't engage for a potential inversion setup into buy side. Then we rejected. Initially, yeah, kept on holding support on this fair value gap, but on that next candle we just cut right through it. So that's 9:45, a new 15-minute candle opening. First 5-minute candle of this 15-minute candle, and then the second one, and that's the third one. So that's 9:55. We're inside the macro timing as well, around the new hourly opening. Also keep in mind that the 10 a.m. hourly opening is also a new 4-hour candle opening. So I would put more, I'd say more volume enters the market on a new 4-hour candle opening, especially after CPI, because traders likely wait for that 4-hour CPI candle right here to play out and close and then make their decision. So then 9:55, 10 a.m., new 5-minute candle on the hourly time frame, new 5-minute candle here, new candle on the hourly time frame, 4-hour time frame, and 15-minute time frame. Initially, we retrace into our entry fair value gap here, this bearish 5-minute fair value gap, just with a wick, and then we smash it down and hit all our targets on that candle already. Moved over 20 points just on this candle, I think, at least, if I remember it correctly. Well, 15 points almost. Smashed down and out to our almost all of our sell side targets. The only target we have left would be that previous day's low on Wednesday. So we will see what price is going to do next here, really. But also, while it happened, we mentioned that, okay, the 15-minute candle is about to close. Closing below this bullish fair value gap, still respecting this bearish fair value gap. That's that 15-minute first, well, let's say hint that we're going to continue lower, paired with the 5-minute bearish fair value gap. But still, doesn't mean that I got engaged on my Funnel account. And if I look at where are we at? Let's open up my stats right here. Yeah, we can do that. Where are we at? That's the 50K account. Even on the 50K account, but let's head over here to the 100K. This week has been, going very well. I think I'm up 1, 2, almost 3% here, or let's say 2.5. Really happy with those results. Secured 250, so 0.25 during London. Usually I don't even trade at all on a CPI news day. Last Friday, what was last Friday? I think the NFP Friday, NFP Friday. So usually on these high impact news event I don't trade. But today, London session, I saw a nice setup, so I decided to take on that risk with, lower risk. Of course, it would have been nice to add another thousands on it, but pretty happy with how we've been doing so far this entire month even. Recovered the account from some drawdown, so beginning of the year at 95K, because I accidentally, on my last trading day of 2023, clicked long instead of short. If you remember the date, Thursday, the 16th of December, I think it was, where we had this, hang on, let me go over to the chart. If we go to the daily time frame, this day, 20th of December, unfortunately, pressed the wrong button instead of the short, and I think at that point in time, I don't know why I ended up losing so much. I think it was 2 contracts, and I just hoped for it to reverse, and it didn't happen. So I closed the position once it almost hit my max stop loss for the day, 5%. Then I decided to leave that account behind and start working on it again in 2024, and that's what I have been doing ever since, taking it slow, really in no rush at all. And that's the current progress on that. So started out on the 28th actually, another 26th. Then here the 27th, my birthday, and then over New Year's I did nothing. Then we started in 2023 on this bull run, 2024. A $13,000 daily loss limit. That's also what I really like about it. It's not trailing up with how much profit I make. So the 10% max drawdown based on this account are based on the initial balance. So let's say I'm up 5k and I would happen to lose 10k. This doesn't mean I blow the challenge. I still have $5,000 breathing room. Almost 50% there to my profit target for to phase 1. I plan on, well, I don't really plan on it, but well, low-key plan on it to get through this phase 1 at least by the 31st, adding that first 100k account to my portfolio with the CFDs, just taking it slow, step by step, and yeah, really not putting lots of stress on myself. Have that 50k challenge going at the same time. So yeah, I'm trading CFDs in the background while watching the futures chart, and I got a few questions about that earlier on the Discord, and I think it's possible. That's why I decided to go with funding pips as well. We're starting to retrace now. So this is our inversion fair value gap. It's just, not that I care about this trade, but let's just get it out for the sake of this example. Once we closed above our lowest bearish fair value gap, what did we do? We tap it. We tap our inversion fair value gap and immediately push back to the upside. So let's see what we do inside this bearish 5-minute fair value gap. If we reject here, or if we actually close above it, because then we would anticipate the same. Maybe not just a quick retest, but maybe a retest of the 50% before we continue higher, taking out this short-term high. Like I said, just because we dropped here doesn't mean we can get back above here. The PM session is still, we still have 5.5 hours or 4.5 hours on this daily candle. Lots of things can happen within that time. But what was I talking about? I was talking about futures, CFDs, and spreads. That's why I created this CFD prop firm comparison. I really wanted to step away from the Apex live trading drawdown for a while and decided to, yeah, after losing all my CFD funding capital with my Forex funds, I made the switch to future funding firms and got funded with Apex, Topstep, Take Profit Trader. Yeah, those are the free ones. But I don't know. I mainly focus on my Apex accounts because they're very cheap. I mean, that's why Apex is so popular. You get your 50k challenge for less than 20 bucks, or sometimes even, yeah, 20 bucks. But that live trading drawdown really is a pain in the ass. So I decided to, in December, to switch over to CFD funding firms just to try it out again. See how much easier it is. That was the main point, because yeah, you have 10% drawdown and a 5% daily drawdown compared to a, I mean, if we bring up Apex here, hang on, let's hop over to apextraderfunding.com. If we compare that to a 100k account, here we only have a 3% max drawdown, and that's moving up while you make profit. So I don't know. So just based on these metrics, I guess everyone would have to agree with me that passing a 100k challenge should be much easier if you have 10% breathing room. So basically a trailing threshold of $10,000 and a profit target of $8,000. That's exactly what I have here with funding pips, without the trailing part basically. So 3% trailing versus 10. And if I'm in profit, that actually increases. So if I'm 5% in profit, I have 5% threshold before I lose the entire account. And the payout process is also a lot easier compared to Apex. There's no, what's it called? No, almost forgot what it's called now. Consistency rule with Apex. You have a 30% consistency rule, meaning if you cash out 5K, for example, your biggest winning trade within this 5K payout can't account for more than 30% of the total profit that you're going to pay out. So you can likely hear I spend a lot of time reading through these FAQs, preparing all the videos, and yeah, that's why I decided to compare the spreads here with the CFD funding firms. Got a couple of accounts because I'm only trading the S&P. I looked for the lowest spreads and I found the lowest spreads on funding pips. 3 pips fixed. But every time I check, it's 3 pips. It's not free, and for example here it's on 5% or so FTMO. I looked at it for an entire week and checked at the same time throughout the day during London Open, New York Open, an hour after that, to see how much variation we have on the spread. On FTMO we usually had a 1 pip variation, so that's still pretty good. On Funded Engineer also, but well, nothing beats a fixed spread at 3 pips. If you trade, for example, EU, and you would want to trade with a forex prop firm, 5%ers has a fixed spread of 0 pips, always 0 pips on EU. Funded Engineer is also pretty good, but we can also see that funding pips is between 0.0 and 0.4. Lowest spreads, $4 per lot commission. FTMO has a $3 per lot commission. For indices, it's actually free. So with Apex and the future funding firms, I actually end up paying fees and commissions. With CFDs, I don't. So it's also a big savings point that basically accounts for the spread and even more. I can get weekly payouts without any consistency rule. I can get paid out with bank transfer and crypto every 5 days, and it's actually also the cheapest challenge if we compare all the 100k challenges with each other. And trade on MT5, which I'm currently doing from my phone, so I think that's pretty healthy. And that's that profit target to drawdown ratio coming out at 1.3, 13% target before you get funded, because you have 2 phases here, and then a 10% max drawdown. So that comes out to a ratio at 1.3. And if we compare it to Apex, we have a ratio of 2 to 1. So much harder if we compare that metric. You have a profit target that's basically, you can imagine this 100k Apex account as your, let's say, $3,000 private account that you're trying to flip and double. Because you don't have 100k to play with. If you lose those 3k, you lost the challenge. So realistically, it makes sense to look at it. Okay, I have 3k to play with. How can I flip the account to make 6k? It's not the easiest thing to do, especially if that trailing threshold is moving up. So if you're $3,000 in profit here, if you lose $3,000 of that profit, your challenge is gone. And just because it says it's a 1 phase challenge here, you still have to reach a specific profit target before you can request your payout with Apex once you're on that funded account. So you would have to reach a target of $3,000 while still having this trailing threshold. Eventually it stops. So yeah, there's a lot to talk about. I have videos about orders on my YouTube channel. One future funding firm I still like, it's also tricky with Take Profit Trader, because they actually switch to a live trading drawdown once you get on the funded account. But currently you can save the activation fee, so you save $130 and 40% on the challenge itself. I think that's a pretty good offer. I still have some Take Profit Trader funded accounts, but yeah, right now I'm just taking a time off futures to really focus on acquiring some CFD capital. And then let's say I make $500 to $1,000 profit, or on that 100k to $3,000 profit during a week. Let's say by Wednesday, I'm going to stop trading on that account and request a payout and start trading it again next week. And then simply, you can say milk or farm the payouts, and then just switching between different accounts, adding more CFD funding accounts with a other prop firm as well. That's basically the game plan for 2024. Little excursion here. But, well, yes, I can share this document. Here we go. You can check out my YouTube channel about that topic as well. I have a playlist comparing future funding firms and also future funding firms to CFD firms. View your channel. Right here, if you go on my channel and then go down here to prop firm reviews, this entire playlist. That's the link to that Google sheet. What about Topstep? So the thing I don't like about Topstep, let's open up this video. I'll show you the exact point. It depends on your trading style, but funded comparison, there we go. Contracts, I didn't include it here. Funded comparison. Yeah, so here we exactly have that, my biggest issue with Topstep. So on your funded account or even on your challenge with Topstep, you can use on a 50K, I'm comparing 50K challenges here, so 50K Apex, Topstep, Take Profit Trader, and Trade Day. You can use 2 minis or 2 micros. And what the fuck is that? Like, look at all these other firms. I don't care. Like, if I can use 10 or 6 or 5 minis, I don't usually use so many minis on a 50K account. 2 minis is most of the time it. But let's say, for example, I'm trading today's CPI news event and I want to adjust my risk with micros because minis are just, yeah, like I said, too much risk for me at this point in time with these huge candles. I want to be able to risk more than 2 micros. And with Topstep, unfortunately, I'm not able to do that because you can either use 2 minis or 2 micros. And in my eyes, that just doesn't make sense. If you offer someone to take a risk of 2 minis, let's say, for example, on the S&P 500, that's $25 per tick. But if you choose to trade micros, you only get the opportunity to risk $2.50 per tick. Why? I addressed this to Topstep, to the support on their Discord. And actually, when I started to put it out on Discord, members on their Discord who have been there for years, they said that they've already said that for months now, and they've never changed anything because all I got back is, yeah, the team is working on it, blah, blah, blah. And the only reason I could think of, they simply not enabling this, if it's the industry standard that if you can use 6 minis, you get to use 60 micros, 5 minis, 50 micros, 10 minis, 100 micros. Then there's something more behind it, because basically in my mind, this is forcing you to trade with minis. And on a 50K account, well, I like to be able to manage my risk very specifically, and sometimes with micros and a big stop loss, you're just not, with minis and big stop losses, you're just not able to do that. So that's just my take on Topstep. Otherwise, they're a great prop firm. I think they've been around for a very long time. 4% max drawdown, pretty much the industry standard. Payout after 5 days. Apex 10 days. Take Profit Trader and Trade Day 0 days. That's really their advantage. No consistency rule. But that $200, I think 5 $200 days before you can reach a payout. I mean, I understand it, but then I would also appreciate it if it would be adjusted to the account size. So on a 50K account, it's much, well, in terms of percentage risk, it's much harder to reach a $200 profit day compared to a 150K account. percentage wise. So why keep that $200 days before you can even request a payout the same across all accounts? Actually making your 50K account challenge one of the hardest ones. Just my opinion on Topstep. Otherwise, I still think it's a great firm. Their CEO is a great guy, old Pitts trader. Used to be funded with them. But this really, didn't work out well for me. Especially once you're, let's say, in a little bit of drawdown, in a iffy situation, or in a tricky situation, and you really have to manage your risk well in order to not blow your account, and you're only able to use 2 micros, $2.50 per tick, that's going to take you forever until you reach decent profit. On the other hand, the only thing that you can use is 1 mini, and that could already be too much. But yeah, that's about Topstep, just my opinion. That's why I also don't have a referral link to Topstep, because I'm not using it. But I'm also saying that it depends on each and every trader. I mean, it certainly apparently works out for some other streamers out there with a different risk approach, but not for me. And that, 2 micros or 2 minis, that's just a deal killer for me. All right, let's see. Do we have some questions on the Discord? By getting too close to my trading drawdown. So I had those 5 green trading days, requested my payout. That's all good. I kept on trading, and then eventually, like we all know, also trading, I think, the Scalper Pro strategy on that account. Kept on trading, and then that one specific day where I couldn't stop myself from trading after already taking 1 or 2 losses, trying to make it back on that same day. Didn't work out. And then on the next few days, I really tried to watch my risk. But for example, on a trade like this, if I enter with 1 mini, let's say on this fair value gap, this is a 10-point stop loss. So if I want to trade today with a 10-point stop loss, this would be $500 of risk. I only have $2,000 available. Let's say quarter of my margin. And now if you're already in margin trouble, of course you could enter with 1 or 2 micros, but you can't go above 2 micros. Let's say if you, for example, want to enter with 4 or 5, in order to actually make some decent profit on the potential setup. And that's, how I eventually lost the account. And that's also the time when I realized that, well, why do they have that specific rule? The only reason that makes sense to me is that, forcing traders to use minis over micros, something that's much harder to control, creates more revenue. Not saying they're bad like that. Prop firm, great reputation, one of the oldest prop firms in the entire industry, just not for me to sign up with them again. Because you've been on that scaling plan. Eventually, I mean, that's where I got the data from. The less you have, the smaller margin you have. So let's say you, on a Topstep funded account, you start out at 0. The more profit you make, I think with each and every $1,000 in profit or $500, you get 1 micro or 1 mini additional on top of the 2 you can already use from the beginning. But once you lose some of your equity and you actually go and draw down from your 0 starting balance, you eventually decrease to only being able to use 1 mini or 1 micro. I would understand if they say, okay, you lose part of your margin, That's okay. We're here to protect you. You cannot use your entire leverage anymore. So you can only use 1 mini or 10 micros, but not 1 mini and 1 micro or 1 micro. So yes, I have a discount code for funding pips. It's also on the Discord and in the video description below, right over here. If you head over to the funding firms section, up here, that's the funding pips referral link. You have to sign up with this link. There's no discount code whatsoever because they already offer the cheapest challenge in the CFD industry, so they don't do those 40% discounts like most of the others do. And then you click on this link, create an account with them, and then you count as the referee. And automatically, once you purchase a challenge, get that 5% discount applied. The last time they had a discount was at New Year's Eve. They typically only do those discounts on special occasions, I would say. New Year's Eve, Christmas, maybe the next one is going to be Easter, I don't know. Yes, you have to trade on MT5 Day Trader. I'm also not the biggest fan of MT5, not gonna lie, but I've got my phone here with the MT5 app, and if I see an opportunity, let's say I would like to enter long on this fair value gap, I simply measure out, okay, how much risk would that be? Not really getting detailed about how much I eventually will lose, because this is just a safety stop loss. If I close below this fair value gap, I'm going to close the trade early anyway. And then I decide, okay, am I going to enter with 1, 2, 1.5 lots, calculate the risk in my head while the setup is forming, or with my standard lot size of 2 if I don't have the time. But I could also open up my MT5 desktop, and I actually, I can open it up right here. I modified it a little so it still feels like home, if you know what I mean. Let me open it up here while keeping an eye on the trading view chart. If we close below this bullish fair value gap, then we're good to go into more sell side. By the way, let's keep an eye on it. Still have 2.5 minutes to go on the 5. So you see I use the same colors and all that stuff. I have the trade assistant here as well. So if I want to enter into a short position, all I have to do is, where is it? Expert advisors, trader system, pull that over here. Load. Open, okay. Then I have the trade assistant here, and let's drop it down to the 5-minute time frame. So I want to enter short. I can set my risk to reward. Set I'm going to enter with the market. Where is it? No, not sell limits, not sell stop. Where's price at? Hang on. Alright, now I'm going to fixate my stop loss, for example, at this high. And then I can open up this little terminal and say, okay, wherever this candle is going to close, automatically calculate my stop loss based on, or calculate my entry size based on 0.5 risk. And it's also much easier to be very specific with that, because you can enter 1, 1.1, 1.11 if you want to, and not just one fixed contract or 2. So that's, also nice for the risk management. It's not too bad actually if you install a few things, and then can also zoom out here and see the bigger picture if you want to. Then you see automatically where the 2-to-1 risk to reward take profit target would be sitting at. Zoom back in, created shortcuts with my little terminal here. But right now I'm also not using it because I think managing it on my phone works perfectly fine. But I think it's not too bad. If you open up MT5 for the first time after trading futures on TradingView, I guess, I would also be shocked. But once you, yeah, I don't know, get a little bit used to it, and you set your right colors to feel home again, and install a trade assistant risk management tool, stuff like that, then yeah, I think it's really doable. I mean, we can take an example trade right here. Let's just try. If we're already at it, so I think on TradingView, we close below this bullish fair value gap. Now it's turning it into a inversion fair value gap paired with this inversion fair value gap. If we don't just chop now, we should really see continuation into these lows. Let's open up MT5 again. Hide the lines. Now we can open up this little risk management tool. I see exactly how much I would end up losing if it hits my stop loss. Let's fix that to $100. I'm in with 0.76. If I want to zoom out here to say a little bit more, I can do that. Modify this, for example. Zoom out a little bit more and modify my take profit target. But you get the idea, I think. Let's keep an eye on it here on TradingView. So now we're inside this inversion fair value gap. That's the only thing that I don't like, that switching in between. I mean, the charts are almost identical, but for the sake of my precision, I like to follow what I see on the S&P, on the futures chart, and then execute based on that, close my position or execute a trade on my phone, and I'm very quick, yeah, with that as well, so that's pretty cool. So if I turn on the lines again, I could say that once again, I'm going to place a trade with 0.25% risk and click sell, hide the lines again. So now I'm in two positions right here. Can manage them one by one, zoom out again, move my take profit target to the slow right here, for example. Zoom in. My stop loss is right above this high. If we fail to continue lower. So let's see what we do around this inversion fair value gap. We have filled in this bearish fair value gap, also a fair value gap here on a 15-minute time frame. Would be surprised if we don't hit the next sell side target, which would be, yeah, that previous day's low and the sell side just below here. But mainly to showcase how you would execute on a CFD account, in case you've never seen that and you only traded futures. So it's really not the worst, for being honest. All right. So let's see, do we have any more questions? Otherwise, I'm going to head off. I'm going to the sauna/spa in a couple of minutes. So yeah, please let me know if you have any questions. Here's a little example execution here now on a CFD account, what it actually looks like and what it looks like inside MT5. I know it's not the best experience, but it might, well, that's at least what I found. It might stop you from long, short, long, short. No, it's going long. 1 minute time frame. Yeah. No, it's going long. Now, shit, I have to get out. I'm getting close to my... You know what I mean, likely. If you execute on TradingView where everything is so simple and clean and blah, blah, blah. A little bit more difficult on... Don't want to say a crappy platform, but yeah. Like I said, you know what I mean. Maybe. If you're not there yet, then eventually you also get to that point. I'm pretty sure of that. So, yeah, like I said, unless there are any more questions, I hope you enjoyed watching the stream and you learned something new. We only have 2 left viewers on YouTube, so if anyone that's still watching got any questions, feel free to ask me now. Otherwise, yeah, we're going to be back next week on Tuesday. And for the VIP members, of course, on our Discord tomorrow. All right, doesn't look like there are any more questions. So thanks, guys, for joining in today. We have 120 views. Really appreciate it, you guys showing up. If you found some value, appreciate it if you come back. Until next time, take care and enjoy the rest of your day and weekend. Bye. All right, YouTube stream is done.